Hello traders, this is Rich Derrick from Tradesight. This is the market preview for this coming session, which is going to be Thursday, March 14th, 2013. I had kind of a lackadaisical session here today. We had the ES up a little bit and the NQs down a little bit. The NQs had relative weakness throughout the session. Apple kind of closed on its heels. I think that colored everything, especially towards the end of the day here. But the Dow did record yet another up day. We'll look at that chart. So we've got a pretty spiffy run of up closes here in the Dow. So definitely want to look at that chart. The rest of the market internals are just kind of okay. The advanced declines, as you can see, were positive, plus 389, plus 338 here. So we do have positive advanced declines, but they're nothing great. One thing we got to be on guard for is days like this where we actually wind up with negative advanced declines. That wasn't really the case today, but if that condition does start to persist, we want to be aware of that. Let's grab the advanced decline chart and just want to talk about this before we move on. The New York side is okay, but definitely leveling off here. The Nasdaq side, kind of a similar situation, but the Nasdaq side is actually below this prior low, so it still has relative weakness. Want to monitor this really carefully to see if we do start to get a rollover. Remember, the advanced declines rolling over will lead stock prices. And it could be by a number of days when the ultimate top is put in. So, we have positive numbers today, so that's not a rollover, but it could be building to one. So just want to be on guard for that. So let's move on and take a look at the ES and the NQ futures. All right, here's a look at the ES futures. We do have this fresh seeker exhaustion signal in place. We have now just again finished 9 bars up to the upside here in a new count, so that's just kind of slightly reinforcing this exhaustion that we already have in place. Still below the next GAN level at 1562.50, so we're still kind of hovering around that 1550 area. So nothing really to report here. It was a positive day. We did close above the open, which is always positive, but the trade has been very muted and fairly lackadaisical. As far as the NQ futures go, the NQ futures on the day were weaker, as you know. Still staging below the 8/8 level here on the Murray Math box, 28.1250. So right now, key support is the 10 EMA, which was touched today and yesterday. And this 28.1250 overhead is very key resistance. So let's take a look at the market internals now. Here's the total put call ratio, which remains pretty benign, so we're not going to spend too much time talking about that. All right, the one thing that the bears do still have going for them is the 10-day trend. The 10-day trend still has overbought energy in it. It has not really been able to get back to that midpoint yet. So there still could be a day or two of potential downside energy loaded into the market up at these prices here in the broad market until we get back to a more neutral reading. This 0.85 threshold, this green line here, is our overbought for the market threshold. So we're still within that area here. Right now, here's a look at the risk on, risk off measurement, which is the SPX divided by the TLT. We're still having trouble here with this with the upper regression level here. So this is definitely a point of resistance as far as this ratio goes. Even while the broad market was up on the day, the TLTs were actually hanging in there today. So we're not really pushing higher much for this level. We've really got to see some higher prices in the S&P, some lower prices in the TLT to keep climbing up along this line. And right now, with the condition of the TLT being as oversold as it is, it's going to have trouble doing so. So this is definitely a little bit of a check mark in the bear camp. Okay, here's the weekly stocks divided by the NDX. We're for the first time now this year taking a shot at this key breakdown level. This breakdown was later on in 2012, and that really kind of led to that fallout that we had early summer for the overall market. We're starting to see the opposite right now. We're starting to see this climb to the upside here. Let me just change the time frame to the daily. The daily, we were trapped in this little lateral range here. Now we broke out to the top side, so that's very positive. But just keep in mind, it doesn't really mean much unless we can reclaim and take this key breakdown area here in the bigger time frame. Here's a look at the oil services, the OSX. That's the red line here versus the overall underlying crude futures. This has actually been having some trouble here. The crude futures got really weak, but did find support because the OSX was not breaking lower. As crude futures were breaking lower here, as you see, the OSX was not breaking lower, which was supporting this. Right now we're starting to see a little bit of a turn down in the OSX, so we want to make sure that doesn't really develop into taking out this prior low. If that does, I think these oil futures are doomed, and we'll very quickly head back down to 90 bucks. But for now, we still have this leader. Remember, the underlying stocks generally lead the commodities. Right now, it's still okay, but we're starting to turn down here a little bit. Now, just one more time here. This break in the oil futures was not supported by a break in the oil producing stocks. So these crude futures were supported. We just want to make sure that we don't lose that advantage here and start to see the oil futures start to roll to the downside. That'd be the oil stocks roll to the downside here. That'd be very bearish for the market overall. Now looking at our multi-sector daily chart, really nothing too much new here. The one thing is that we're starting to see a little bit of a rollover in the BTK. That's the red line here. It's very extended. We've got a big spread here between the risk-on assets, the SOX, the BTK, the banks, versus the risk-off asset class, which is the XAU. XAU still just kind of bumping along the bottom here, but this is a very wide spread. All right, let's take a look at the individual sectors here from best to worst. The best on the day was the XAL, the airline index. That was up about 2%. Just want to point out a technical feature here. We have this 9 bars to the upside here in the seeker setup phase. Then we have this 1 through 13 countdown. Now, when you get this 1 through 13 countdown and it's basically lateral, you really should expect that it's really just consolidating price and is probably not going to reverse the market, but rather produce and allow for another 9 bars up. What I want to point out now is that as of yesterday's close, if I turn on projection mode, you can see that we are now 9 days up in this new seeker setup phase. So now we've got a 9, 13, those are the red bars, and then another 1 through 9 here, green. So it's a 9, 13, 9. So what we got to make sure here is that we don't see a reversal tomorrow. I think that we're probably either we'll see a pause in the ascent of the airlines here, or we're going to see a reversal tomorrow. So definitely just be aware that we've got a 9, 13, 9 pattern in place now. Transportation stocks were very strong, strongest really outside of the airlines. And I just want to point out that now we're up into that 8 ace area on the Murray math levels. We're up at 62.50. Right up in that area. This is going to be major resistance. On this one, we've got a 9.13.9 here also, but we just pushed above the second 9 here. This 1 through 9 doesn't count as 9.13.9 because it overlaps with the countdown phase. But we can talk about that in detail sometime later. But nonetheless, we're up against this 8 ace level, so this is key resistance right here in the transports. The BKX was higher on the day, but is really still just kind of inside here. We're 9 days up now on this little run, so this is got a lot of extension to it, and it's fairly overbought. So you just have to be aware of that. Might need a little bit more time here to consolidate. We're still in the overbought territory on the GAN box. We're between 0 ace and plus 1 ace, so we are overbought and potentially looking for more leadership, maybe from the oil patch. Here's the SOX. The SOX, as we looked at in the ratio chart, was strong on the day relative to NASDAQ. Did produce a new high. Key thing here is we're right in the area of key resistance at the 8 ace level at 437.50, and the risk level from the seeker exhaustion is still active and is a key level to consider that a lot of other folks won't see. That's around 442.25 for the SOX. 442.25 key resistance here in the SOX now. BTK was also pretty decent on the day. This is now still gaming this risk level from the seeker exhaustion. See how these come into play, and the market realizes this and remembers this. These are just energy movements. It's not magic. But needless to say, this is a key level, and it's definitely making this chart take a little recharge here and potentially still turn lower and make good on this 13 exhaustion signal. OSX is still trapped in this little range here. Keep in mind that we're going to be 11 days up here still in this seeker run, and we just want to make sure that that if we do push higher, we're ready for that 13 to print if we get up high enough above this 8/8 level. Here's looking at the XAU. XAU is just kind of grinding down here. XAU is obviously the golden precious metals miners. It's the risk-off asset class right now, outside of the bonds. So it's still struggling here. We had this one close above the 10 EMA, but remember, to qualify this and to make it officially short-term positive, we have to trade one tick higher than the high of that bar that closed above it, and we did not do that. We used the same methodology for our stops, but we did close above it. Didn't get that trade above it. We're still waiting for that. If we do, even tomorrow, we don't. Even though we closed down today, if we do that tomorrow, it will go to short-term positive. So be aware of that. We do have this MACD cross that's positive for now, so definitely keep this on the list for a potential reversal. It's still kind of just in the waiting room right now, waiting for it to develop. So I guess we got to talk about the gold futures now. The gold futures did qualify as short-term positive. We did trade one tick above the closing candle here that closed above the 10 EMA, so gold is now short-term positive. See the difference in the day? We did use the 10 EMA as support, and that's one of the reasons that we focus on that particular level. We do have positive MACD cross and a lot of room before we get to the zero line. Now let's also take a look at the crude futures. Here's the crude futures. They're just kind of just trapped here between the 10 EMA and the 50 right now. This 4/8 level at 93.75 is definitely key, and it's kind of like the draw if we can get it going. Right now it is key resistance because you can see that's pretty much where the topping tails intraday have been finding resistance. Well, that's gonna be it for this evening. As always, thanks for listening, and this has been Rich Derrick for Tradesight. Hope to see you again soon.